Jessica, thanks indeed for joining us once again. So, if aviation authorities in the U.S. now seeing no need to pull the Boeing 737 MAX from the skies, while many other countries are actually doing so. All of this while Boeing's share price continues to fall.
Yes, Devin, thanks. Great to be with you here. The Boeing story is continuing to unfold, and we're following it very closely here. Investigations are continuing, and like you pointed out, a number of countries have decided to ground the 737 MAX after the crash about 2 days ago. Those countries include the United Kingdom, Singapore, China, a host of European carriers, but not the U.S. The U.S. Federal Aviation Administration issuing a global notice of the jet's, quote, continued airworthiness. And you have to keep in mind that two of the jet's main operators are Southwest Airlines and American Airlines, which are continuing to fly the plane. We also have reports today that Boeing has come out and said that it is going to be upgrading its MAX cockpit software system, which is quite an interesting development there.
Just shifting focus, Jessica, let's talk about the dollar move. Some weakening today, and you'll tell us what that is about. But there are also some saying that irrespective of what the Fed does with the interest rates, emerging market currencies can expect a stronger dollar for some time.
Yes, absolutely. So today we are seeing the dollar weaken, the Bloomberg Dollar Spot Index down for a third straight day. We saw the dollars decline this morning after U.S. consumer inflation data missed estimates there. But in terms of the big picture and the longer term outlook for the dollar, we are seeing many long calls, and we're seeing many analysts come out and be quite bullish on the dollar. In fact, back in December, Barclays came out and said the dollar's real effective exchange rate should rise between 2 and 3% this year. BNP Paribas also coming out, changing its position on the dollar, saying that it sees about a 5% gain in the first half of this year after actually seeing a weaker dollar previously. So we are seeing those bullish long-term calls. And to give you a quick stock market update, Devin, the S&P 500 rallied for a second day. Tech stocks leading the way higher here. We're really watching the gains in Apple, Google, and Twitter.
And just finally, Apple continues to struggle with iPhone demand. I mean, this is a big one, with the trends going from bad to worse. I believe the latest report coming out of some research done in China saying the Chinese are, in fact, not researching or looking for this phone online as much as they did a couple of months back.
Yes, Apple is also a very interesting story here. A lot of analysts talking or continuing to talk about this lack of demand for iPhones, especially in China. In January, actually, Apple cut its revenue outlook for the first time in almost 2 decades because of this lack of demand. So really showing how it's sort of hurting the company here. And, you know, it's quite interesting that we're sort of getting this now. The Apple CEO has also come out and said that the struggling Chinese economy, as well as the U.S.-China trade tensions, have caused this lack of demand for the iPhones. But if you take a look at Apple stock, it's actually posting quite an impressive rally here. Apple rising about 27% from its low in January. Bank of America Merrill Lynch actually upgrading the stock to a buy yesterday. It has about a $210 price target on the stock, and it's citing about 10 reasons to be bullish on Apple, and those include valuation and a growing user base.
Interesting indeed. From Bloomberg, Jessica Summers coming to us from New York. Thanks very much indeed.